As Bitcoin pushes into six figures, should investors watch out for a bubble popping? Welcome to Market Insight. I'm Elena Casas. Bitcoin passed $100,000 this Thursday morning as the market celebrated President-elect Donald Trump's choice of pro-crypto Paul Atkins to run the SEC. Other crypto assets have risen alongside it, giving the sector an estimated value of $3.8 trillion. But it's not the only part of the market where valuations look a bit speculative, with the main Wall Street indexes chalking up record high after record high. So, are investors pumping in too much hot air? To talk about that, I'm joined now by Mike Bailey of FBB Capital Partners. Mike, I was interested to hear you think some potential signs of a bubble are forming. What do you think investors should be looking at more closely?
Yeah, absolutely. So I think your introductory comments are spot on in terms of some of the more speculative parts of risky markets. Crypto, for example, Bitcoin, certainly keeping an eye on that. That's something that's an indicator of just a risk appetite. I think more broadly, though, in terms of assets where many others own them. So just looking at equities, looking at broader equity markets, the U.S., for example, a very large market, but we are seeing valuations approach not necessarily all-time highs, but kind of getting back to the dangerous levels we saw in late 21. We all know what happened after that. So that's worth watching. And I think investors should probably keep an eye on volatility. For example, something called the VIX index or fear index, it's creeping down, which suggests complacency. Maybe investors are really not as focused on some of the potential risks out there. So we'll see. Certainly, we are seeing a steady economy. We're seeing companies continue to grow. However, there are a few warning signs starting to percolate here as we get into the end of the year.
What are those signs then? What do you think might bring stocks back down to earth?
So it's hard to know, if we're in a bubble, typically you get some surprise that pops it, for example. So ahead of time, it's hard to know what that might be. However, it could be any number of things. In the very short term, we've got a Federal Reserve meeting coming up. If the Fed does something surprising to the downside, perhaps fails to cut interest rates, that could certainly be a surprise. That would be very unusual. If you see something, again, coming out of the new Trump administration, if you see some big company out there really have a major disappointment, those are certainly all risk factors. At this point, really, it doesn't seem like those are high probability events. However, as valuations continue to ratchet up, that is something that investors need to keep an eye on.
You mentioned the Fed there. Jerome Powell said yesterday that the Fed has the space to move more cautiously given the strong economy. Does the market need more rate cuts? Does it matter if there are only a couple in 2025?
Yeah, that's a great question. It does seem like the Fed is pretty keen on making several rate cuts in 24. It seems like they've kind of set up that precedent and they're ready to move. However, I do think as we get into next year, they could decide to spread that out and perhaps push out some of the cuts towards late in the year. Inflation is certainly a big part of that. We're mostly done with sort of crushing inflation and getting rid of the bad old days. However, it's still lingering a little bit. We're going to get another inflation data point next week. That may feed into what the Fed's doing, probably more likely for next year. Again, with the short-term data, a lot of times the Fed does what investors expect. They really don't want to add volatility to markets. However, as we start to go out a few months, I think there's a greater chance the Fed's going to say, hey, wait a minute, economy's doing pretty good. Let's keep a little bit of the foot on the brakes and make sure we don't go back to some difficult inflation.
The next key data point for policymakers, of course, is tomorrow's jobs report. What if that were to come in very strong again?
Again, another factor that sort of feeds into what the Fed's looking at. I think it would be fairly unusual to see a massive spike in jobs. And I think the Fed is aware we get other weekly data and that sort of thing. However, you do get surprises. So if there is something, especially I think a very perhaps challenging situation for investors would be a hot jobs report tomorrow, followed by a very hot inflation number next week. You get sort of a double whammy there, and you could see the Fed say, hey, wait a minute, we really need to keep our foot on the brakes and slow down as far as some of these rate cuts. So certainly worth watching, but again, seems like a fairly low odds that we're going to get some major surprise out of the jobs number.
On the other hand then, Mike, we've talked about risks, but what do you think could justify these high valuations going forward?
Absolutely. So I think the question is, how did we get here? Why are stocks trading at all-time highs? Why are valuations up? think there's a couple things there. One is frankly just fundamentals. Companies are growing really quickly. You've got these huge mega cap tech companies. They're big, they're profitable, they're growing quickly, they're meeting or exceeding expectations, and they're becoming a bigger portion of the U.S. market. So as you have that sort of mix shift involved, perhaps the broader market is worth more. You've got just a different type of average company now versus 10 or 15 years ago. That's one of the things that the bulls are looking at. It's been a very nice run for a couple of years now. That could continue, or you could see something unexpected. At the moment, a lot of the data points suggest we're still seeing a lot of growth out of these mega caps again. But investors have to be highly attuned to every next step that we're going to see here.
Mike Bailey of FBB Capital Partners, thanks so much for that analysis. Well, that's your market insight. Don't forget, you can watch more videos on Reuters.com.